Our next teacher is a graduate of the Canadian Institute of Financial Crime Analysis course at Seneca College. He is a certified anti-money laundering specialist and a certified Bitcoin professional. He's currently the COO and AML Compliance Ninja at Outlier Solutions, a Canadian-based consulting company that set out to break the consulting mold by focusing on 3 core principles: value, open source, and continuous improvement. It is my great pleasure to introduce one of the oldest CBPs that we have, Mr. Rodney MacInnes. Thank you.
Thanks, man. Hi, everyone. My name's, as he said, Rodney MacInnes. I'm going to present today on what is quite possibly the most boring topic here, but we're going to try and make it a little fun. And since we're a small group, if there are any questions, please just throw your hand up, shout them out. If you're too embarrassed, you can pass a note to somebody who's less embarrassed, and they can shout it out. And if you want to catch me afterwards, that's totally fine as well. I wouldn't be a compliance nerd if I didn't start out with some hefty disclaimers. I'm not a lawyer. I have plenty of other character flaws, but that is not one of them. I don't represent a government or any government agency, so these are not any official statements, positions, anything like that. If you have a question that relates to a real-life situation with, say, a client or someone that you know, come talk to me afterwards. Don't shout it out on a live recorded camera. We can discuss that offline. And information should be free. So this presentation is listed on the shed, however people decided that is pronounced. Feel free to take it. If you want to attribute it to me, awesome. If not, we're not likely to send an army of lawyers. I know everyone loves AML and fraud and all of that fun compliance-related stuff. If you have a comment or a rant or anything, as you can tell, I like cheeseburgers. If you buy me a cheeseburger, then you can rant and ask all of the questions and do all of the commenting that you want. In this short time that we have here, please try and not do that thing. Good call. It wouldn't be a money laundering or an anti-money laundering slide without a terrible clothesline money laundering. The other one that's quite popular is a lighthouse, so we're starting off getting that out of the way right now. So what is AML? For anyone that doesn't know what AML is at this point, AML stands for anti-money laundering. And money laundering being the taking of proceeds of crime and attempting to make that appear as if it were legitimate money. This has been going on for a long time, and what you focus on in the space is the prevention, the detection, and the deterrence of money laundering within your business. Fraud. Fraud being the intentional perversion, which I thought was kind of a funny way to put it, of the truth in order to basically dupe someone out of something that is their right or their property. Again, you run into similar commonalities. You will see as I go through this presentation that there are a lot of similarities, but also some very drastic differences between fraud and AML. So what are the fraud-related risks? Money laundering-related risks. Your business would be or could be susceptible to money laundering if you don't follow kind of the rules and regulations that have been spelled out in legislation for whatever jurisdiction you're running in, which are trickled down from the Financial Action Task Force or FATF, with kind of set the bar of what is considered appropriate measures to mitigate the potential of money laundering. Failure to implement the requirements based on your jurisdiction could leave you open to legislative penalties. In Canada, we call them AMPs, or administrative monetary penalties. In the US, you would probably see FinCEN-related advisories or OFAC-related advisories, which can be pretty pricey. Fraud risks, on the other hand, are very different. There's no requirements to have an anti-fraud program. It doesn't relate the same way that AML does. So there's no legislation, there's no rules, there's no anything that you have to do in order to stop fraud. The risk that you run is you go broke and you go out of business, or your reputation is severely tarnished to the point that nobody wants to do business with you anyways, effectively meaning you're broken out of business. So for AML, what do you have to do? You need to have an AML compliance program, which is made up of multiple parts. You need a program which is documentation that spells out your policies, so what you have to do, your procedures, how you do it. You have to have an assessment of the risk that your business could be used to launder money or finance terrorism, which talks about the type of business that you run, the type of transactions you do, your customers, your geography, your locations, things of that nature, and then the controls that you have in place to stop that. So you would write it as if we didn't do anything, and this was Bitcoin in 2010, 2011, where there wasn't much going on as far as what people do in comparison to today's day and age. You would assess your business as if you didn't identify any of your customers, if you didn't monitor any of your transactions. Then you include the mitigating factors, so those controls that you have in place. So we have customer identification processes. We run some sort of chain analysis tool in the background. We monitor our transactions using that. We keep the records to make sure that, if someone says, "Have you done this?" we can say, "Yes, and here's the evidence." Those are your documentation. You'd also have to have training and someone responsible for your AML compliance program. And then every 2 years, you'd have to have an effectiveness review, which sounds like as much fun, or is as much fun as it sounds like. So basically making sure that you're doing what you say you were doing and you're accurately reflecting what is in your policies and your procedures. Operationally, you have to know your customer, which includes identifying your customers and kind of setting what you would expect a baseline. So if I say I'm a cashier at Tim Hortons, or, sorry, that's my Canadian coming out, cashier at Dunkin' Donuts, thank you. I could reasonably expect what my transactions would look like. If I'm doing $50,000 a week, then basically I need to go get a job at Dunkin' Donuts. Monitoring the transactions, so you've set that bar of kind of what you expect to be normal, and then you look for things outside of the norm. Reporting when you have certain types of transactions size-wise or suspicion-wise, those have to be reported to a regulator. And again, like I said, the record keeping. So you have to make sure that if anyone, your bank, your regulator, your business partners say, "Did you do this?" you can actually have verifiable evidence that says, yes, I did. Now with fraud, there is no fraud program that you have to have. Most companies do, and it is documented. You'll run into operationally very similar requirements or things that you should be doing, which include the client identification, knowing your client, the monitoring of their transactions, and the reporting. In this case, reporting wouldn't necessarily be to a regulator, it would be more to a law enforcement agency. I'm going to switch gears a little bit into investors and some of the due diligence that helps prevent fraud within your company, problems within your company, and the risks that aren't necessarily as obvious when it comes to your investors. I'm going to run through a few real-life situations. All of this information is taken from public resources. You can go and check all of the data that you need to. There's no secret stuff that I know of. So, in 2013, and around between 2013 and 2014, Ripple Labs, or the XRP2 fund, got into some hot water with FinCEN, which is the US regulator. What happened was one of their investors sent an email saying that he indicated that he wanted to purchase 250,000 XRP. And when he was asked to give his KYC information, he refused and dropped one of those "do you know who I am" kind of things. And the email kind of went up the chain and it was approved, and that XRP was allowed to be processed, even though that was well over not only their policy threshold for where you should identify somebody, but also because they were registered with FinCEN at that point, what they should have been doing according to legislation. FinCEN came in, looked at the transactions, looked at the patterns, looked at the history, and said, why didn't you do that? You said you should. Your documentation says that you should. Why did you purposely avoid having to identify that customer? That seems suspicious. And ultimately what happened is they got fined $700,000 for not identifying that person because they failed to report a suspicious transaction. There were also 2 other transactions that were called out within that same penalty, but the one that they chose to speak about was this particular one. They said the other 2 were not of as much importance. So that kind of drives home the making sure you know who your investors are to know. I mean, in this situation, you very likely had that information on file somewhere else. You probably could have figured out the information that you needed in order to cover your KYC requirements by using what you would have collected in your AML due diligence on your investor.
Sorry, I have a question.
Yeah.
So is this suspicious simply because of the account?
Nope. No, it was suspicious because the person in question refused to provide identification. So you're looking at an indicator that says if somebody's purposely avoiding or refusing to provide identifying documentation, that would be considered an indicator of suspicion. Then perhaps coupled with the size of the transaction, then you might be moving more to something that is more logically suspicious. But for the most part, it's the refusal to provide identifying information.
Can the company not make the transaction, period?
Absolutely.
So they chose to do the transaction under those circumstances?
Correct. So you're looking at an investor, a fairly large investor, looking to make also a very large purchase. Those kind of factors combine into... Yeah, exactly.
So the jurisdiction that matters in terms of the KYC stuff is the company's jurisdiction, right? Because I'm pretty sure Roger Lear is outside of, he doesn't have U.S. citizenship anymore because you announced it. So it's on them to, they have to know their customer regardless if they're outside of their area, right?
The jurisdiction is, in that instance, because they're U.S. based, they would need to be adhering to U.S. regulation in that instance. You may get into situations where a different jurisdiction says if you're dealing with our people, you have to follow our rules. In this instance, because the U.S. has very long, big, strong arms, they would be following what you would want to do from a U.S. perspective. If you were in a smaller country, you may be adhering to the FinCEN kind of U.S. rules because you're dealing with a U.S. person. So, as all things compliance related, it's very nuanced, and it may change depending on where your jurisdiction is. In this particular example, they would be following U.S. regulation regardless of where Roger happened to be located at that time. Good? Yeah?
I haven't heard of FinCEN before. Do you get in contact with them as an agent to triple check the fraudulence, or how would reporting it to them have helped them out of this matter? How do we help you out?
So you have an obligation to report suspicious transactions or in the U.S., suspicious activity. And the filing of a SAR or a suspicious activity report is submitted to FinCEN. So if you have something going on that you're like, this doesn't seem right, or somebody's refusing to provide that information that you're giving them, then the report would go to FinCEN, and that would be their involvement in that. Sorry, one sec, yeah.
So had they reported Roger, okay, nobody's gonna get anything from Roger anyway, right? I mean, it would have been just reported and go on from there, right?
Potentially. There, like I said, there were other suspicious transactions within that penalty that were kind of unrelated, that they didn't go into great detail in the report. So FinCEN publicly released the report related to this, and there isn't enough information in there to say whether or not they would have, like, that would have been okay. The consideration is that in your policies it said you have to do this. In your suspicious indicators it said that that qualifies as suspicious. These two things, you didn't kind of miss the mark on that one. And so if a regulator comes in and says you didn't follow your own rules, well, you're not in so much trouble because they're your own rules. If you didn't follow the legal, like, legislation rules, then you're in much bigger trouble. And that's in this instance where you can kind of lean on somebody and say, yeah, you didn't follow your own rules, but you also missed this big one.
But did it have anything to do with he was convicted, though? I mean, yeah.
No. It like, in the grand scheme of things, and I don't know the intricacies of what Ripple's AML program looks like, but I would assume that somebody who may have a past history, that would be, put them a little higher on your risk level. Somebody doing large transactions. All of these things could have made him a higher risk customer, but without seeing their documentation and knowing what they would consider as like their threshold for considering risk, I can't specifically comment on that. Okay, perfect. Anyone else? Yes?
Yeah, I think you also have to be careful in that if you think that something's suspicious, you go ahead anyway and also report it to cover your ass, basically. You could also be liable there as well, for certainly Canada for money.
Yeah, absolutely. For anyone that doesn't know Peter, he spoke on this already this morning, and it didn't steal all of my lines, but also a great resource if you have questions as well. So we'll move on to, for anyone Canadian, probably something that you would know of. American, not so much. So Wesley Weber is Canada's most prolific counterfeiter. This gentleman created $100 bills that were so good, the government actually changed our $100 bills. And he got arrested for that in 2001. Spent 5 years in prison. During that stint in prison, he learned things like market trading and stuff like that. So when he got out of jail, he started another company called Goldridge Financial, and started telling people, I can help you invest. I can help you with this. And over the course of, between 2008 and 2016, so over the course of 8 years, he got in trouble multiple times. So the OSC, or the Ontario Securities Commission, who kind of regulates all things security-related, financial advising, stuff like that in Canada, first told him, you can't do that anymore. He said, sure, and that kind of disappeared. And he did it again, and then he did it again, and then finally the last time we're like, look, we got you in trouble 8 years ago. This is kind of your final straw. During all of that, he had started another business. So Encryptix was a crypto exchange based in Canada, and I don't really know a whole lot about them. There is not much information on them out there. They don't seem to be around now, but given the time frame of when they were in business, potentially they could have done a lot of business within the area. Interesting to note in this is the CFO for Encryptix. So everybody in Denver obviously can buy pot anywhere. Canada recently did that same thing. However, in Ontario, we did a lottery. So in order to get a license to legally dispense marijuana, You basically had to put your name in a lottery, and there were something like 42,000 applications for what was less than 100 licenses. One of these licenses was issued to the CFO of Encryptix, who had connections to Wesley Weber, who was like a criminal multiple times over. And again, there's not a whole lot of information I can see behind what went on behind the scenes of the due diligence that went on by like basically our country to see, is this guy a guy that we want selling weed? And after kind of all of that went down, the company, like the company that they started from the weed side, is still operating in Toronto. They've had multiple issues, and so Wesley kind of moved himself a little further away from that and started investing, and he used his wife's name. Her name is Michelle Cam. She is a real estate agent, and he basically used her name and started popping up as Wesley Cam and doing all of this investments. And there are quite a few. If you do a minor amount of open source research on the internet, you can find companies he's invested in, and it's a little shocking. And I'm sure everyone here's familiar with kind of the Quadriga debacle that's unfolded over the last however long it's been. So Omar Janani / Omar Patron / Michael Patron was a gentleman involved in Quadriga, like one of the founding members. In 2005, he was arrested in the US on identity theft and fraud. He ran Shadow Crew website that dealt a ton of credit card, fake identities, stuff like that. He was also pled guilty in 2007 to additional criminal charges. He had changed his name throughout that process, and oddly enough, was deported to Canada. And this is kind of where the thread of due diligence follows from the previous person. Is this guy was like deported to Canada, sent into Canada, and then showed up on a crypto exchange, Quadriga, that was registered with FinTrack as a money services business, passed the due diligence, and he had to have been a director because he was a beneficial owner at that point. Again, I don't work for FinTrack. I don't see their registration has been pulled down since, and it's just the kind of the overarching piece of like Canada may need to do a little better on our research of who we're giving licenses to and letting into some of these emerging industries. The kind of the part that really blows me away with this one is he's like Michael Patron is still out there. He's left Canada at this point, but if you go to his website, which is michaelpatron.com, you can read a lot about his expertise and what he can advise you on, which includes things like trading and the market and how to IPO your business and how to, get public listings and stuff like that, which Quadriga was looking for early on. All of these things, if you start to read through all of his expertise, you can very quickly open a different tab and flip back and forth and see the stuff that he's literally either been arrested for, pled guilty to, or been wrapped up in over the last 20 years as his expertise and the things that he can help you with. It's kind of staggering. The the bigger names that you can see that are still out there, they're still listed. So like, for example, FinTech Ventures Group, they have very, very proudly invested in 13 different companies, most of them Canadian specific. I'm not going to get into who they are. Again, if you want to know, they're not hard to find. The Vancouver Bitcoin Cooperative, the Lifeboat Foundation, I think there's a Brazilian Jiu-Jitsu is another one. And so to kind of go back, this is something that if this guy came to you with either a duffel bag full of cash, a bunch of crypto, a wire, whatever that thing would be, do you have the process in place now to say, before I say yes to your giant wad of cash, do I feel comfortable accepting your giant wad of cash? And this is the AML fraud and due diligence side of trying to incorporate all of these into one smooth, seamless process where I'm going to sell you $10,000 worth of Bitcoin. I have to do certain things to do that. But what you don't see it as often is people will accept $10 million and do less due diligence because A, it's a lot of money. B, I need that to get my business off the ground. And it's a weird conversation with somebody who's like, take my $10 million, but before, I have some questions for you. Please answer these questions. Please give me this information. Please provide this background that I can feel comfortable looking at your $10 million and knowing that I'm glad you've invested in my company. I feel comfortable that you're not going to pressure my staff to try and cheat, cut corners. I know that you've not got a really colorful background. And I'm not saying that, I messed up once 10 years ago. Don't hold me accountable for something now. But that's something you would want to consider going forward. So now you've got all of these things that you kind of know you need to do. AML, you need to follow what the law says you have to do. Fraud, you want to be in business tomorrow. And your due diligence on investors and people related to, like tangentially related to your business that aren't necessarily your customers. What do you do with that? We created this 2x2 model, it's been a while now. And this is applicable to a lot of the areas of your business, especially when it comes to risk, just generally. And you can spend a lot of time in the yeses and the nos, and the yeses and the nos, your suboptimal ways to solve things. And it's hard because both of those work just fine. You can have an AML program that ticks all of the boxes that does absolutely nothing for fraud. And you'll be okay. You may get hosed here and there, but you won't go out of business necessarily. On the other hand, you could have the best fraud prevention. So much legwork on who your clients are and where the money's coming from and everything else, and miss some of the minutia of what makes up your AML requirements, which frankly isn't going to put you out of business either. In Canada, you'll probably get like a slap on the wrist at first. Then maybe a harder slap on the wrist. In the US, it's a little bit of a different story. You might want to be a little more careful with that. But again, it's not going to put you out of business. It's just going to cost you money. Yes?
How do those slaps on the wrist take place? Is it a fine? Is it a court appearance? Like, how do they slap you on the wrist?
Typically, you would have an examination. So your regulator would come in, and this is from a AML perspective. So they would come in and examine your business and say, much like what happened to Ripple, you didn't follow your procedures and you didn't file the suspicious transaction, ergo you're going to get a fine. The only extreme cases is where you're looking at something that you could be criminally liable for. If someone came in and was bringing hockey bags of cash and you just kind of were like, I'm not going to pay attention to that, that's no problem. There hasn't been many of those. So mostly you're going to be looking at fines, and they're going to be, in this instance, as I said before, AML's legislated, so all of the fines you'd be looking at would be AML related. You would not get a fraud fine. Your fraud problem would come in of people stealing your money and you not having it. So what you want to do is you want to be able to marry those into that ideal solution. What can I do from a fraud perspective that covers off my legislative compliance requirements? So the law says I have to identify people, and I have to do it in this way. And it's in Canada and the US are fairly prescriptive of what qualifies of identifying a customer. So if you can have a really elegant solution that makes sure that I'm dealing with you, I know you are you, and your money is yours and where it's coming from, then ideally it would cover your AML requirements as well. Where you get into a lot of what's missing the mark is people trying to go above and beyond when they've missed the baseline. So much like Michael presented earlier on the kind of the C4 levels or the CCSSA levels, you can't be level 3 without achieving level 1. And so people will throw a lot of money having an elegant solution and miss the baseline of, you can stop all of the fraud in the world, but you've missed your AML requirements. And so being able to marry those into the ideal solution is that sweet spot that you want to find. The best tools and resources. This is, if anyone hangs out with compliance nerds or lawyers all the time, the word nuanced will pop up a lot. It's not necessarily a cop-out, but it's hard to answer everyone's question with a general blanket of commentary. What works for your business will not work for your business. Even though you guys could have a very similar business model in a very similar industry, the nuance of how you get your clients, what your expectations are and stuff like that will vary wildly. So there's no right cookie cutter that like, here, this works for everybody. And if you find someone who says that, run away. That's a scam, because being a global expert in anything regulatory, we kind of joke at Outlier that how many people in here speak more than 3 languages? 1-ish. How many people know someone who speaks more than 3 languages? Right. How many people know someone who speaks more than 10 languages? If you did, how well do you think they would speak that 10th language? Enough to get by. Regulation is not something you want to just get by on. You want someone who's focused in that jurisdiction, who knows the ins and outs, who knows what the regulatory expectations are, and that changes based on where you are. So it's difficult in tech because you can release something globally like that. But back to his question earlier, it's different if you're sitting in Canada dealing with a Chinese individual whose transaction is flowing through the US. It gets really messy really quickly. Striking the balance between automation and cost can be a struggle, especially when you're new, just starting out, or even if you're trying to do a big expansion. You got to look at where those costs are best spent. And so if you can find that ideal solution that marries what you need with what you're required to do, then maybe spending that money on that product, software, whatever it is worth the money. Maybe it's not. Maybe you can hire a couple analysts to go through and do it manually, but have them trained for the indicators that you would need to look for. That may be a better solution, at least in the meantime, so you can get that product out there and start running and getting some of the profit in. As the profit comes in, then maybe automation might look as a better solution as you start to expand rapidly and need either more humans or a more electronic-based solution. And as far as hiring, this is something we come across a lot of. People want to find someone who's a crypto expert because we're working with Bitcoin here. Not necessarily. The best hires I've seen to date which I know this guy can comment on because he's made a few of them, are someone who's got a solid background in AML, in fraud, in analytics, and then train them on crypto. We all started in the crypto space, not knowing much of anything, and fell down the rabbit hole, and very quickly were able to kind of get our feet underneath this. And like it's been a few years for me, and I still, like, I've never stopped learning, probably never will, because it's constantly evolving. So bringing someone in who's got the background knowledge, I can teach you crypto afterwards. I can teach you the indicators that you need to know in the space. I can teach you the norms. I can teach you the trends. What I need you to have is the baseline of the AML, which isn't necessarily more complicated, less complicated, anything like that. It's just you're going to find more people who know AML than you are to find Bitcoin right now. That may change, but that's right now. So consider your risks. Yes.
On your previous slide, you talked about striking a balance between automation and cost. For a startup, how much do you need automation? Like, if I'm really good at Excel, is that enough?
Yes, but, excuse me, this goes back to one of the requirements that go between fraud and AML that's consistent is a record keeping and an understanding of your business. So you could totally do it in Excel. However, as you start to move into the hundreds of customers, the thousands of customers, the tens of thousands of customers, like, I don't know what kind of machine actually I do know what kind of machine you're running. It's a really nice MacBook, but at a certain point, Excel is going to crap out and it's just not going to be able to do the functions that you need it to. So this is where you get into that cost automation piece, and also time. Like, monitoring something in Excel takes a lot of time, and even an analyst's time is valuable and could be better spent doing other things. So maybe then you start talking to some of the providers to say, this is my business, this is my model, this is where I'm struggling. Tell me how your solution can help me streamline this process, cut out this person. Maybe if I get this new automated software in, I don't need 6 analysts, I only need 2. Well, I just paid for that software and probably some more marketing or something like that. So that's the balance that I was talking about striking. Considering your risks. The risks related to AML, which I've kind of already covered a little bit, but just to drive home, the risks related to AML and the risk related to fraud are vastly different. But there are similarities. With AML, you are worried about not following the rules and kind of getting that fine, or quite frankly, losing your banking relationship is a very common one, especially in Bitcoin. So you need to make sure that your AML program is up to snuff. At the same time, that fraud program will lose your bank account just as quickly if you get hacked, if you run out of money because someone else stole it, if you have all of these wild cases of people providing fraudulent ID and stuff like that. So measuring that risk is really important, and knowing why you're measuring it. So do I care what my bank says? Absolutely. Do I care what the regulator says? Yes, but. Do I care what all of my customers think? Absolutely. So it's measuring those risks and finding that comfort zone, because everybody's comfort zone is going to be different when it comes to risk. Your worst case scenarios. So looking at, what's the catastrophic fail that I could face if this happens? Then looking at, what's the likelihood of that thing happening? If the likelihood is fairly high and it's a catastrophic event, that's probably worth paying some attention to spending some money on, to throwing some energy at, versus the catastrophic event that's astronomical and not likely to happen. Something you should be considering, but not something you should be spending countless time and effort on. Being able to stay on top of what's going on, to knowing the trends. As Peter's presentation focused on, the industry trying to align the indicators that we really need to care about. If I worked in AML, I would want to like I am working with Project Participate, but it's one of those things that I would want to be able to know what's going on, what's evolving, what's happening. Want to stay at least as close to ahead of the curve as you can, which is kind of difficult in the AML space because it does tend to move rather quickly. And the other thing to note is compliance is never perfect. You're not going to write your program today, dust your hands, fold your arms, and sit back like that guy right there, just stretching, being like, yeah, I'm good. That's not going to happen with compliance. It is ever evolving. It is a constant, it's a constant living document, and you may hit a really good space, and the next day, it's not going to fall apart, but it's going to change. And you can't just sit back and think it's done and it's dusted. I'll look at it next year and it'll be fine until then. That's not the case. To that end, if someone is trying to give you, like a consultant's trying to give you an AML program and they're putting it in a locked PDF, that's not okay. You should be able to change whatever you want. That is your document, that is your program, and if something changes today and you need to change it tomorrow, you should have the ability and not have to call somebody and be like, so we found this thing out, we need that changed. So just make sure that doesn't happen to you. Where should you start? So whether you're working in your basement with this cool idea that you just came up with a week ago and you haven't done anything, told anybody at all, versus you've been in business for 10 years. You've got the people and the money behind you. You need to budget for these things. So as far as compliance, if you're looking to do something that is going to intersect with AML or has a potential to be used for fraud, these are things you need to think about as soon as you possibly can. The earlier, the better, because it's just going to make your life easier, to be honest. Building that with compliance in mind as a background and engaging with not necessarily professionals, but somebody who knows what they're talking about. So if you've got the money set aside where you're like, okay, I've earmarked this much money to talk to a lawyer, and I've earmarked this much money to talk to an expert, and then my buddy who works at the analyst, he's an analyst at a bank or an analyst at a big exchange or something like that. Start with the analyst. Bang those ideas around. Get an idea so that when you move on to the experts and the people whose time is much more valuable, you're not wasting that time and you're able to attack what needs to be attacked. Building compliance in at the beginning and not as an add-on at the end is really what's going to help you save on the costs, figuring out where your automation is, finding your sweet spot, figuring out what your risks are, what you're comfortable with risk-wise and what you're not. As someone who's a consultant that's worked in compliance for over 10 years, it's staggering how often you see someone come up to you and be like, okay, our beta's out and we're ready to go to market full blast. I have some AML questions. And the first question is, what should we be doing? And it's really difficult to convey to someone how important this thing is and how much you need to consider this before you put your name out there, before you get out into the public space. And having a conversation with somebody who's super excited to release something and be like, pump those brakes, hang on, here's a few things that you at least have to consider before doing that, is never a fun conversation.
I just wanted to point out there's a lot of similarities with the cybersecurity world as well.
Absolutely. And I think that's common in a lot of spaces that don't directly drive profit. It's something that costs you money, but you don't really know the value of it until you've been on the wrong side of that. So the reason that our whole team has had Ninja in their title for, I think, over 6 years now. And people are always like, why Ninja? Because if I've done my job properly, you'd never know that we were there. We go in, we do what we're supposed to do, and we disappear. And my favorite clients are clients who have been on the bad side of AML, who've been on the bad side of fraud, because they understand the value. They understand how important it is, which I'm sure in security is the same way. Somebody that knows that I would rather up front spend this little bit of money, which like isn't frankly a little bit of money, it's usually quite a bit, but when you're looking at a multi-million-dollar hack, when you're looking at a $700,000 penalty, these are things that you could have stopped with spending tens of thousands up front instead of hundreds of thousands after the fact. So that's where the building with compliance in mind, and he's 100% right, building with security in mind, which kind of leads into the anti-fraud side of it as well, will be super beneficial come down the road. You may look back on it and be like, well, that was money wasted. I've never been hacked. I've never been in trouble with a regulator. My bank loves me. That's awesome. That's where you want to be. You want to be able to look back and be like, actually, that was money well spent because I don't have any of these problems. Does anyone have any questions?
Total newbie question out
Yeah.
from this space, but I do consult small businesses. When does someone need an AML program? Before I ask that, the kind of thing I'm thinking of is a mom and pop grocery store. They decide to throw up an e-commerce site and they're offering gift cards, say, and they're getting hit like every 5 minutes. Somebody's buying a whole bunch of gift cards. Clearly something suspicious going on, but they're not looking for it. They're just seeing, wow, we're making a lot of sales. Is that kind of small business need to be thinking about this too?
Yes and no. So in your specific example, from an AML perspective, and in like specific to Canada, no. From a fraud perspective, probably. But what I would do is I would actually find someone like me or someone that you know who's a little more involved with AML. Hypothetically, this is what's going on. Is there something I should be worried about? Is there something I should be doing? Am I potentially offside or in trouble? Before you go and jump into like, okay, we need an AML program right now, when you start doing all that, those are the questions that you need to kind of ask. As far as AML specifically, it's very prescriptive of what is considered a regulated entity within Canada and the US. If you do this type of business, these types of transactions, then you're regulated. It's not completely black and white, but it's fairly clear. In Canada, you can actually write to the regulator and say, this is what we're doing. Would I be considered an MSB or a securities dealer or whatever? And they will give you a very specific response. There's also all of those that have been submitted previously, like all of those requests or clarifications, are actually publicly listed on their website. So you can go and read through. FinCEN is quite good with that as well, as far as what's available to kind of look at, has someone else asked this question and what was the response?
Can I add a little bit of that? So your grocery store provider might not themselves be a regulated entity, but the issuers of the gift cards might. So they may actually have in their contract with that provider that if something shady is happening, they're supposed to be letting the provider know what's happening. So part of it would be for them to review what they got in their contract and what they got from that provider and their policies and procedures. And they may be meeting their obligations by turning around and saying, hey, here's what's happened, here's the information that we've collected, here's why we think it's shady, and they give it to the provider, and the provider handles all of the government regulatory side of it. And that's often the case if someone's an agent. So if you're an agent of Western Union, for instance, then you would let Western Union know, and Western Union would take care of all of the reporting and everything like that. So for a lot of small businesses, it's really just getting back to that provider.
For anyone that doesn't know, this is Amber, our chief AML ninja, and she will be speaking on this subject tomorrow afternoon, or a regulatory related subject tomorrow afternoon.